Hello, good morning, ladies and gentlemen. Happy Friday to everyone in the house. Good morning once again. And I'm so pleased to welcome you to another morning live session as we take a technical dissection of the current market structure in anticipation of both the UK and the New York session today. Well, the last 24 hours has been a little bit choppy for most of the USD pairs, as we saw our price action has been doing some consolidation so far in the last 24 hours. So we shall be looking at that in a moment. Kindly confirm you can hear me and you can see my screen by typing probably hi or happy Friday or good morning in the comment section, so that I get a positive feedback that we are good to go this morning. So I will be checking the comment section to see some feedbacks here. I can see Ishak, good morning to you. How are you doing today? And glad to have you around this morning. Just confirm that you can hear me and you can see my screen by typing hi in the comment section as we get this started. All right, thank you very much. So with that being said, here let's dive into the current market structure. And you know what we do here whenever we want to start the day, it is very appropriate that we first of all look at the fundamental chart. We want to see what is really going on in this market. We want to see the sentiment that will be driving price action. And for today, we have a macroeconomic event coming up today, which definitely everyone in the market will be looking forward to. And that is the publication from the University of Michigan, that is the Consumer Sentiment Index. And this survey always gives us a personal consumer confidence of the economic activity in the US, and it shows whether consumers are willing to spend money in the economy or not. So if we have a positive figure for today, then definitely it's going to be a bullish signal for the USD, and if we have a negative, it's going to be a bearish signal for the USD. And if we look at the data that has been spotted here, the previous data came in at 67, and in fact the consensus analyst and market sentiment is suggesting that the data will remain the same. So is this really going to be what will be happening today? Well, we shall hold on and see what the actual figure will be. So this event is coming up in I think 6 hours from now, so we also want to be anticipating this event. And let's take note that this is a very strong and high impact event too as well, where participants will also be positioning themselves in such a way that they can catch that volatility when it finally happens. And that's simply what we are going to be doing here this morning. So with that being said, here let's dive into the current market structure to see what is really going on in this market so far and how we intend to anticipate any trading opportunity. So the first commodity we are going to be looking at this morning, as usual, is the US oil. And on the US oil here, if you had seen what has been happening here, if you have been with us here, you will notice that price action has been choppy ever since price action tested the $66 area. And since then, that happened on Wednesday here, you will see that since then price action has been caught within this channel between the $66 area and the $66.85 level. And in fact, since the beginning of this week, we have been selling the US oil, and to further buttress the strength of the sellers in this market, we have a bearish trend line figured out after connecting the series of lower heights in this market. So we were able to identify this bearish trend line, and in fact this trend line has consistently guided us to sell the US oil. And in the last 48 hours, though we saw price action has been trading below that structure, but one thing that is key about the structure is the fact that price action is yet to find a new low, as the previous low at the $66 level still remains. As you can see, the last time price came close to that area, it was unable to break the previous low. And for me at this point, and looking at it from a technical standpoint, it is very likely that we might be having a bullish momentum coming in anytime soon. And to further guide this expectation, we don't want to be jumping right in, considering the fact that this is a long-term bearish momentum. We want to see a significant signal that will give us that comfort to join a bullish momentum at this point. And if we look at the bearish trend line, like I said prior to the session, that we shall be using this bearish trend line as a yardstick for trading activity. And look at what happened here during the early hours of today. We finally saw the breakout of that trend line. And for me at this point, is this a signal that we want to be buying? Well, I told us yesterday in my publication on the USOil that we want to be buying as soon as price breaks out of that trend line, as it could be a sign that the trend line may no longer have the capacity to continue to hold that bearish momentum anymore. So I stated here during the I think during the night yesterday, I said here that as soon let's see, I said secure all. I wanted to secure all buy position. We shall wait for a breakout of the bearish trend line for bullish confirmation. Anything other than this will be a bearish expectation, but only at the breakdown retest of the $66 level. So like I said here on my publication yesterday, I said anything other than the breakout of the bearish trend line will definitely be giving us a bearish momentum. But I don't want to be selling at this point, considering this consolidation phase here. It's more or less an indecision phase where I think participants in this market are looking forward to a catalyst that will be driving price movement. So I want to see price action take out the buy positions at the $66 area to give me a confirmation that we are good to sell the USOil. So unless price action takes out all the buy positions here, and then I will be considering doing the sell momentum in this at this particular point. But if price action continue to trade above that bullish trend line, that bearish trend line here, definitely we want to be holding on to a bullish bias. So we already have a buy position triggered at the breakout of the $68.85 level. So this is going to be our yardstick for trading activity today. So what I simply mean by this is that as long as price remain above both the bearish trend line and the $68.85 level, we want to feel comfortable in our buy position. Now, with the kind of situation we have here, you could have your stop loss somewhere right around the $68 level to secure your current position, and let's see how far this bullish momentum will go. So with the expectation of a continued bullish momentum in this market, we should be having a buy stop order above the $70 area, with the hopes that price action will continue to the upside. And in fact, if we do have a breakout of the $70 area today, definitely we might be seeing price action surge to the upside. So let's see how price action plays out from this current structure in order to take advantage of the potential opportunity we have in this market. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update if there are any sudden surprises that springs up along the line. Well, okay, that's that on the USOil for today. So if there are anything I would like to add, I will be dropping it in the comment section on my TradingView platform. So if you have any questions, feel free to drop your inquiries in the comment section. All right, okay, so in the absence of no questions, I want to assume that we are good to go. So let's move on to the next pair, and the next pair we shall be looking at this morning is the GBPUSD. Now on the GBPUSD, what has been happening here since the beginning of the week, we are still in a channel anyways. If you look at the current market structure, so let me scale up a little to the 1 hour time frame so that we can see things more clearly. at this particular point in time. Okay, so this is what we have here. We have two key levels on this current structure here, and one is at the 1.2200 level, which is the highest point price has ever been this week. And then we have a support line at the 1.200 area, though price is yet to come back into that structure. In fact, throughout this week, price is yet to even test that level. So the week started with a bullish note around the 1.20350 level here, respecting that bullish trend line to give us that signal that we might be seeing a bullish momentum. But we were not jumping in right away, as we need some further confirmation to give us a clue into where price action is likely going to be going. Is this going to be a false breakout or a true one? So at this point, we looked at the next stop here, as we saw the 1.21050 level serving as a resistance point for the week. Let me extend this out a little bit so that we can see things more clearly. So we have the 1.21050, which was the resistance line at the beginning of the week. And with that situation there, which was followed by the breakout of that structure with an engulfing bullish candle, it was a beautiful signal for us to join a rally to the upside. And during the early hours of Monday session, during the live session on Monday, we saw price action dropping below the structure, and we saw this as a retracement of this impulsive move that started this week. And we decided to position ourselves around this area to look out for buying opportunity, sharing a confluence with that bullish trend line, where we said the breakout of the 1.20750 level will definitely be welcoming additional position in that regard. And this was exactly what happened here. We had our first position triggered at the breakout of the 1.20750. We had another position at the breakout of the 1.21050 level. And look at what happened. Price action moved in our favor. The first position moved about 120, and the second position moved about 100 pips in our direction before we started seeing the resumption of selling pressure at around the 1.2200 level. And in fact, this lasted about 48 hours. And for the fact that we were using this bullish trend line as a yardstick for trading activity for the week, we said if price action remains above that bullish trend line, we shall feel comfortable in our buy position. But if it so happens that a breakdown of the trend line happens, then we want to be anticipating a bearish move. And on Wednesday morning, we identified this bearish trend line after connecting the series of lower highs. And for the fact that price has been finding lower highs, leading to the breakdown of that bullish trend line, it was a beautiful signal for us to join a decline to the downside. And we joined at the breakdown of the 1.21450 level. And in fact, since that breakdown happened, price action moved about 140 pips in our direction. And look at what has been happening here in the last 48 hours. Though yesterday morning we were looking forward to price doing a retest of that sell window, which I told us all that if you could afford a 50 pip stop loss, you could take advantage of this move around the 1.21050 level. And since then, price actually moved about 75 pips before another wave of bullish momentum happened. So I shared this on my public platform yesterday after citing buy pressure above the 1.20350, as price was unable to break the previous low. And you all know from a technical standpoint, whenever we have a new higher low like this, it is a sign that we might be having a build-up of buyers in this particular market. And so I share the simple setup on the 50 minutes time frame in that regard to support this bullish expectation here. I think I shared this on my public platform at let's quickly run through the GBPUSD's publication. And on this chart we had I saw Nico Martin's comments on USDJPY. Well, USDJPY is one of the pairs we are monitoring for this week, so I would implore that you stay tuned in so that you can be part of that session. And Ishak, I saw your comments as regard the BTC and the Euro USD. I'm not sure we'll be able to treat that because of what we normally do here is to review all the pairs we have been monitoring since the beginning of the week. So it's not always appropriate to jump into an instrument in the middle of the week. I always like joining from the beginning of the week so that we can follow the tempo and the psychology of that market. So let's include it into our next week's trading session, okay? And we can run things from there. All right. All right, so this is the GBPUSD, and what I made mention of here, I said, okay, when we started seeing the buy pressure at around above the 1.20350 level, I told you that, okay, this is it. I cited this buy pressure here. Though we already had a sell position triggered, price action had moved significantly, and the sight of the buy pressure here I told us all to secure all sell position, as the appearance of buying pressure around the 1.20350, price unable to find a new low could incite a buying opportunity at the breakout of the 1.20750. So I shared this immediately on my 30 minutes time frame. I shared a simple setup here where I identified the reversal pattern with a temporary demand zone sitting around the 1.20300 level, with the neckline of the reversal pattern at the 1.2080 area. And to further buttress the potency of this reversal pattern is that temporary bullish trend line in the meantime, which connects the two pivot low at this current market structure. And so with this information here, we positioned ourselves above the 1.2080 level, and since then price action has continued to find higher highs and higher lows. I also identified the level at the 1.21100 area here, where we decided to add more position to our existing trade. Then we saw the same thing happen. The position was triggered here, so we had two positions running at this point. Then this morning I shared how we took our TP target, price action hit TP target at around that area. So with the current situation we have in this market right now, we really need to understand what is really going on. Well, first of all, I would like to congratulate everyone who are taking advantage of this opportunity, as you would have made a minimum of about 150 pips thereabout if you did have these two positions running. So with the current situation we have in this market now, and going into the New York session today and the UK session, how do we intend to trade the GBPUSD? Will this bullish momentum continue to the upside? Well, this is one thing we will be listening to the structure to give us a clue into what the expectations are. So first of all, I would love to acknowledge this bullish trend line which we identified yesterday, and I'm of the opinion that this trend line might likely guide us into how to trade the GBPUSD for today. So what I'm expecting, though we've been beginning to see some selling pressure around the 1.2180 level. Let me extend this out a little bit so that we can see things more clearly here, okay? So we have been witnessing some selling pressure around the 1.21800 level here. And if we go to as far back as the beginning of this week, you will see that that level also has been a strong selling niche for participants in this market. So what this simply means is that every attempt by the buyers to break out of this zone has been met with strong resistance from the sellers. So we are at a critical point in the market right now, as we need to be very, very patient to wait out for market structure to evolve that will be supporting a trend continuation to the upside, if that is going to be the case. So in order to buy the GBPUSD today, we might want to be seeing price action do a breakout of the 1.2180 level, taking out all the sell positions there to give us a confirmation that price action wants to continue to the upside. So I would like to see something like this, a breakout of structure. Please mind this, we are not going to be having a buy stop order above the structure with this current situation that we have here. Considering the fact that it has been a strong selling niche in this market, we would need further confirmations to happen before we now join, because a breakout of this level could turn out to be a false breakout, and we don't want to get caught in that kind of scenario in this particular market structure. So we want to see something like a retest of structure on our lower time frame to give us that confirmation to join that rally to the upside. So when we scale down to a much more lower time frame, like our 15 minutes time frame, it could be your 5 minutes, your 10 minutes time frame, we want to be seen by pressure above the 1.218 or around the 1.218 area to give us that confirmation that we want to be going bullish in this particular market. So unless this happens, we are not joining that bullish momentum right away. Now, another thing that could happen from this current structure is that we could have a sell momentum that will break down the 1.21500 level, bringing price back into the 1.21 area. And if you look at the significance of this 1.21100 level, it shares a beautiful confluence with that bullish trend line that we identified during the later part of the New York session yesterday. And remember, this trend line has been guiding our bullish momentum to those particular points in time. So we also want to look at that area too as well to see how price action will be reacting to that level to decide if we are going to be buying or selling the GBPUSD. So as soon as price gets, if this momentum continues, that it drops below the 1.21500, drops to the downside, we have a structure here where we want to be patient enough to watch how price action will be reacting to that level to decide if we are going to be buying or selling. So as soon as price gets into the 1.2110 level, we want to be seeing one of these two things for us to be able to join. First of all, if price action comes into the 1.211 level and we start seeing rejection of the structure, that is, sellers who are finding it very difficult to break down the 1.211 level, and this will turn out to be buying pressure, then definitely we want to be looking out for a reversal pattern around that area to support a bullish bias. So when we scale down to a much more lower time frame, like our 15 minutes or 10 minutes time frame, we want to be seeing something like a reversal pattern. It could be your double bottom structure, head and shoulder pattern, falling wedge, whatever case it may be there. Breakout retest giving us a confirmation that buyers are getting stronger, then we want to be joining that rally to the upside. And if this happens, price action continues, then the breakout of the 1.218 level will definitely welcome additional position. So that is how we are going to be looking out for buying opportunity on the GBPUSD for today. However, if price action gets into the 1.2110 level, and instead of the resumption of buy pressure, price action breaks down the trend line, then at this point we want to be seeing this as a bearish signal. And one thing about this kind of signal is that, considering the strength of the sellers since the beginning of this week from this market structure, we are not going to be joining right away. We want to see some confirmations to happen, and what we want to see is on our lower time frame, like our 5 minutes or 10 minutes time frame, we want to be seeing some retest of structure, selling pressure below the structure, then we want to be joining that decline to the downside. So these are the things we shall be looking forward to today, on Friday. And be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are if there are any sudden surprises that springs up from this current market structure. But in the meantime, this is what we shall be looking forward to guide our trading activity for today. So once again, congrats to those who took advantage of that buy position we had yesterday morning. All right, with that being said, here I will be moving on to the next pair. If you have questions, feel free to drop your inquiries in the comment section while I see what is going on here. You're welcome, Nico Martins. All right, innocent babe. Okay, so with that being said, here let's move on to the next pair. So the next pair we shall be looking at this morning is the XAUUSD. And on the XAUUSD, let's see how the week started for us on the XAUUSD. So let me zoom out a little bit into the beginning of this week. Now, the week started on a bullish note here. This was where price action started for us this week. That is the 1,869, though we were not part of that move. as we wanted to monitor how price action will be reacting to that structure. Remember, at the beginning in my video on the XAUUSD, I laid emphasis on the importance of the 1860, where if price action remains above that structure, we shall definitely be looking out for buying opportunity. So the first I think 10 hours of Monday morning, we saw our price was caught within a channel here between the 1895 and the 1869. And you all know what we look out for whenever we have this kind of channel. We want to be seeing price action do a breakout of the channel for trading opportunities. It could be a breakdown for selling opportunities or a breakout for buying opportunities. And in fact, we saw price action break out of the 1895, breaching that resistance line for the first time that week, and this was a beautiful opportunity for us to be part of that buy position. And in fact, price action moved over 2,000 pips in our favor before we started seeing the sell pressure resume at around the 1,915 level. And on Tuesday morning, I told us that this could turn out to be a reversal pattern as we continue to see selling pressure, negating all attempt by the buyers to break out of the 1,915. And one thing I said on Tuesday morning is that we want to be having a sell stop order below the 1,904 with the hopes that price action will be dropping to the downside. And in fact, during the live session anyways, we had a stop order triggered at that point, and we had our stop loss somewhere right around the resistance line of that 1,915 area. And it actually took us about 18 hours before price action came into the positive side, and we saw this price move all the way down with over 1,800 pips before we started seeing this bullish momentum come in. So we were able to also make some profit around that area on Wednesday morning, and during the live session on Wednesday, we had this trend line figured out where we said we shall be looking out for continued selling pressure, that is price action respecting the trend line to push price further to the downside. But with the breakout of that trend line during the early hours of Wednesday morning, it was a sign that probably the trend line might be breached. And one thing I told us all on Wednesday is that it could turn out to be a false breakout, so we need some confirmations to happen. And we actually saw some retest of structure, though it was sharp, and some of us joined this move. And we also had a buy stop order above the 1,915 to join that move to the upside. So if you had missed this one, well, you would have had opportunity of joining this one here, as we said that morning that we want to be having a buy stop order above the 1,915 level. And in fact, price action moved significantly well in our favor as we saw the situation happen here. And during the live session yesterday, we also had a buy position triggered as soon as price came back to retest the structure. And it was at this point that we closed the live session yesterday. We had this move all the way up as price action moved about 1,800, and I'm very sure we were able to make some profit from that current structure. So now that we're heading into the New York session, UK and New York session today, what is going to be our plans? What are we expecting to do from this current market structure? Are we buying or selling? So well, I was able to identify this simple setup here on the 30 minutes time frame yesterday. I shared this on my public platform. Can I run through that so that we can see things more clearly here? Okay, XAUUSD. Okay, so this is it on my TradingView platform. So yesterday is on the 16th, so we shall be zooming into the 16th of March. And okay, so this is what we saw here yesterday. Okay, this was Monday morning, right? And we already had a buy position here waiting for the breakout of the 1,920. Price action broke out of the 1,920, added another position at the breakout of the 1,924, and after which we started seeing some selling pressure resume, leading to the breakdown of the bullish trend line that was supposed to be our yardstick for trading activity yesterday. And I shared this. I said selling pressure resumes, taking out all the buy position with a small profit, A breakdown retest of the bullish trend line and the 1920 level will be welcoming selling opportunities. So that was my comment to that update there. And we saw the breakdown of the trend line with the hopes that price action will continue to the downside. But one thing we noticed here is that though we had a sell position, we were taken out of that sell position as we saw buy pressure resume around the 1915. And this morning I shared it. I said buy pressure negated the bearish expectations. Let's see how price action reacts to the 1930 for trading opportunities. Now this is the 1930 area. Okay, let me readjust this. I think I'll have to relabel this one as this was a typographical error. So we have this at the 1930 level, and hold on, let's see, let me take this out a little bit. So now with the situation we have here, looking at the current structure, you can see that in the last 48 hours, despite the bullish momentum that started this week, in the last 48 hours, price action has been consolidating between the 1930 and the 1915 to further emphasize the indecision in this current market. And whenever we have an indecision like this, it is more or less a sign that participants, major players in this market, have stepped aside, waiting for a catalyst to bring some liquidity into the market before we can be able to make an informed decision. Now remember that I told you earlier that we are expecting a macroeconomic event today, that is the consumer sentiment index, which is coming up in 5-6 hours from now. I'm of the opinion that this might likely be what participants are waiting for. So with the information we have here, looking at this flat channel here, well, you all know what we look out for whenever we have a flat channel. We want to see price action do a significant breakout of the channel. It could be to the upside or it could be to the downside to be able to join any momentum in this market. And in the last 6, 7, 8 hours, we can see that price action has been trading around the 1930. And look at what happened around that area yesterday. We saw selling rejection from that area. The same thing also happened on Wednesday. We saw selling rejection from that area. So we are at a critical point in the market. We cannot just jump into any opportunity right now, as we need some further confirmations to happen. So for me at this particular point in time, I would want to be seeing a significant breakout of the 1930 by pressure above the structure to give me a confirmation to join a rally to the upside. So this is what we shall be looking out for to buy the XAUUSD. But you might be asking that how do we take advantage of this? This is looking a little bit messy around this area. So in that regard, we shall scale down to a much more lower time frame, maybe like the 5 minutes time frame, so that we can see how price action has really been trading around that area. Now, if you look at the current structure around this area, at first sight, this is what I saw here. I saw buying pressure around the 1928. So let's quickly label that area so that we can have a visual understanding of what I am talking about here. So I'll give this a black color so that I will differentiate it from the previous structure that we have here. So we have a black. All right, so we can see that we've been having some buy pressure around that area, which has lasted over 4 hours now. Buyers continue to negate all attempt by the sellers to respect that resistance line at the 1930 again. Now, if we take into consideration this impulsive move that started from the 1915 level here, you will see that price action appeared to have transitioned into a reversal pattern, which is looking more like an head and shoulder pattern, but not really at this particular point in time. And with this kind of situation here, it's looking more like a reversal pattern is evolving at this particular point. And for us to be able to know that this reversal pattern is mature, we need a neckline that we shall be using to guide trading activity. And the neckline, as you can see, falls at the 1928 level here, where a breakdown retest of that structure will definitely be giving us a confirmation that the reversal pattern here is valid. Now, so what we want to be seeing at this current market structure is to see price action do a breakdown of the 1928 level, retest of structure in order to join that decline to the downside. So we should be having something around below the 1928 area, looking for certain opportunities around that area. So let's position ourselves right below the 1928 level in order to take advantage of a potential sell opportunity in this market. However, if that is not the case here and price action instead continues to find higher highs here, what structure can we use to guide this possibility in this market? Well, if I bring out my line chart on the 5 minutes time frame and connect the series of lower highs here in the last 1 hour 30 minutes, I guess we have a bearish trend line figured out at this point. And if we bring back our candle chart and do some readjustment, we have a trend line already figured out here. So the 1930 level will be an area where we want to be looking out for buying opportunity. That is, if price action breaks out of the 1930, as you can see here, the 1930 level also shares a beautiful confluence with a bearish trend line. So if price action breaks out of that 1930, remember we are not jumping in right away, as we need some confirmation to happen before joining. So a breakout retest is what we shall be looking forward to, buy pressure above this level for us to be able to join a bullish momentum in this market. So let's keep this in mind. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision in this market. So that's what we shall be looking forward to buy the XAUUSD for today. So selling the XAUUSD, we are going to be positioning ourselves right below the 1928 level, where the reversal pattern, the potential reversal pattern here, will become valid as soon as price breaks down, retest the 1928 level. So let's see what happens in the next couple of hours. I'm very sure that one of these things, two things will happen, and I will be giving you an update in the comment section of the XAUUSD publication on my TradingView platform. So with that being said, here let's move on to the next pair, which is going to be the last pair we shall be treating for today, and that is the USDJPY. I hope Nico Martins is still in the house. If you are, we are going in on the USDJPY right now. And on the USDJPY, let's quickly run through how the week started for us on this chart. Now, if you look at this chart from the beginning of this week, it has been quite choppy in this market, as we have price action consolidating, oscillating between the 135.100 area and the 132.500 since the beginning of the week, making it it could be an headache here trying to identify where price action is likely going to be going. But one thing I would like to let you know here, based on the current market structure, is that we are caught within a consolidation phase, which is more or less a sign that there is an indecision in this market. And participants, whenever we have an indecision like this, it is quite obvious that participants are looking forward to a catalyst that will be bringing some liquidity into the market to drive price movement. And remember, I told you earlier that we have a macroeconomic event coming up today, and I'm of the opinion that we might be seeing some traction prior to the macroeconomic event or post the macroeconomic event. So what I'm simply saying is that 30 minutes into the macroeconomic event, we might likely start seeing some traction, giving us a clue of where price action will be going. And following the macroeconomic event, we shall be seeing some momentum build up following the traction earlier identified. So one thing at this particular kind of structure here is that we need to be very, very patient to be able to be part of any potential opportunity in this market. Now, the week started on a consolidation phase here. We saw our price action was consolidating between the 135.100 and the 135.600 area. And you all know what we look out for whenever we have this kind of consolidation. We want to see price action takes out the support line or the resistance line of the channel for trading opportunity. And this was exactly what happened during the early hours of Monday. We discussed this during our live session on Monday. Looking forward to, we saw the breakout retest of that level, which actually triggered a sell position for us at the beginning of the week. And price action moved about how many pips? Over 100 pips in our favor before this bullish momentum began again. And we were able to make some profit there, though it wasn't that much, but we were able to make some profit. And following that bearish momentum, we begin to see that price action started finding higher lows. And during our live session on Tuesday rather, we saw the situation here where price action was finding higher lows. We saw this engulfing candle strapping out of the 135.600, and we positioned ourselves just right above the 134.00 level for buying opportunities. And we were also part of that buy positions. As we took that move, price action moved about 95 pips in our favor before this bearish momentum started. And remember what I said on that Tuesday morning is that we shall be using this bullish trend line as our yardstick for trading activity. And what I normally mean by that is that as long as price remain above that bullish trend line, we shall feel comfortable in our buy position. But if at any point in time we do witness a breakdown of that trend line, definitely this is a sign that we are about to have a momentum shift. And in that regard, we had a sell stop order below the 135.250 level. That was on Wednesday. Following our live session here, we saw price action did a breakdown of the trend line and the 135.250 level to trigger our sell position in this market. And in fact, price action moved 190 pips in our favor before price action was caught within this channel again. So we had another channel between the 135.600, which was initially our support line for the week. Remember, at the beginning of the week, this was our support line. So now that support line has turned out to be a resistant line so far in the last 48 hours now. Then we also have the support line of this new channel sitting at the 132.500, sorry. So we have this channel here. And during the live session yesterday, we were looking forward to either a breakdown or breakout of that channel for trading opportunity. Though we had a breakout happen yesterday, we saw the breakout happened during the New York session. We took advantage of that move and price moved about 85 pips in our favor before price bullish momentum came in again. I hope you moved your stop loss accordingly as soon as price action moved in our favor. That is what we simply do here. I always emphasize that whenever price action moves in our favor, we want to be moving our stop loss to secure the current position just in case a sudden pullback will happen. And if you had done that, a worst case scenario, you would have closed out at break even at this particular point. Now, with the situation we have here, the consolidation phase still continues, as you can see, between the 135.600 and the 132.500 area. So what we shall be doing today is continue to remain patient. We still want to remain patient here. We cannot just jump into any positions right now, as we need further confirmations to happen. And from the look of things here, I'm of the opinion that we might be going bullish from this current structure. And the reason why I said we might be going bullish is this. Now look at what happened on Monday morning after the breakdown of that support line that we identified at the beginning of the week. We saw that price drop to the downside where we made some profit. We made over 100 pips. And we saw that as soon as price got into the 132.500 level, we saw a sharp rejection of that structure. The same thing also happened on Wednesday here. In fact, we saw multiple rejection of that area to further emphasize the strength of the buyers at this particular point in the market. Yesterday too as well, though we had a sell position running, we saw that immediately, it didn't last long, it didn't last 3 hours, price action sprang back into the channel to negate all selling pressure in that market, giving me a clue that buyers are indeed very strong in this particular area. So at this point in time, I'm of the opinion that we might be seeing a breakout of the 135.600 level. We already saw an attempt by the buyers yesterday evening during the live New York session yesterday. We saw an attempt there, but it was negated. And if it continues this today, that price is unable to break the previous low, we are going to be looking for buying opportunity above the 135.600 level. You might want to have your buy stop order sitting above that structure with the hopes that price action will be continuing to the upside. Okay, so we shall be looking forward to the situation here, and if price action breaks out of the 135.600 level, we shall continue to monitor price action. Remember, we are on a long-term bearish momentum, and a breakout retest of the 135.600 is definitely going to be seen as a counter trend opportunity. And don't forget that we have a structure at the 135.800 level, which was a strong demand zone during the course of last week's trading session, where our price action was broken on Friday last week. And you all know from a technical standpoint that whenever we have a breakdown of structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure, probably in anticipation of another wave of bearish momentum. So we are going to be keeping this in mind while we take on this buy position. If that is where price will be going for today, we move our stop loss accordingly. We also have structures here which we can use to guide our trading activity. So as soon as price moves into the structures, we move our stop loss accordingly to secure the current position. And as soon as price gets into the 135.800 area, we secure all buy positions and wait out to see how price action will be reacting to that level to decide if we are going to be buying, adding more position to our buy position, or getting ready to join a decline to the downside. But I will be giving you a feedback in that regard as soon as anything new happens in this current market structure. So be rest assured, I'll be jumping in the comment section on my TradingView platform to give you an update on whatever is going on from this current structure. So on this note, I would like to call it a day here, and I hope that we are well equipped in order to be able to take advantage of any potential trading opportunity going into the UK and the New York session today. I'll be seeing you in the comment section of my TradingView platform as usual as we prepare for the new week. Sorry, for the New York session and the UK session today. All right, everyone. It has been a wonderful moment. I wish you a wonderful weekend, and hoping to see you in the comment section on my TradingView platform as usual. Do have a wonderful day, everybody, and a beautiful weekend too as well. Bye bye.